Well, the market's rebounding slightly this morning, but will it be enough to get back on track? This all coming after the Dow tanked 2 days in a row, dropping more than 1,900 points. That's 6.59% over the past 2 days. That is the worst two-day percentage loss in a while. The president not taking it well at all. This is from the Washington Post reporting President Trump is reportedly furious that stocks are plunging, telling those close to him that he thinks health official warnings have spooked investors. For more now, I want to bring in Doug Flynn. He's a certified financial planner and co-founder of Flynn Zito Capital Management. Thanks for coming on, by the way. I want to jump right into this here. Help me out to understand this. How do these back-to-back 3% drop days compare with historical tumbles in the past?
Well, there's two ways to look at it. One, you normally do have 3 or 4 greater than 5% drops in any given year. And the market was looking for some kind of a catalyst to make it potentially go down. But in history, what you're looking at, and being a student of history, the most closest thing we'd want to look at are perhaps the SARS problem in 2003 and the Zika virus in 2015, 2016. And in both of those cases, the market went down almost 13%. So this went down about half of what a normal, and they both went down about 13%. So this went down about half of that. So, we almost would have expected more of a downturn, and that doesn't mean we still can't get it, but that would put it in historical perspective.
With your background, I just got to say, talking to you right now here on camera, you don't seem concerned.
Well, you're always looking for an opportunity to get in. I think the big fear here is whether or not there's going to be a second outbreak. If you look at the total active cases being reported, that peaked about a week ago, and we're actually off about 15% worldwide on an active cases number. So perhaps it is waning. Now, it's spreading all over, which is what caused a lot of this recent turmoil, and the market was looking, people were looking for a reason to sell. But this could be an opportunity to get back in if it is behind us. Of course, if it spreads and there's another leg down, then that's another story. But if you look at the backdrop of corporate earnings, consumer sentiment, the people are feeling good about their personal situation, and the companies haven't yet had an impact. It's too soon to have an impact on the individual companies as far as their earnings are concerned. That can happen in the latter part of the year, but it hasn't happened yet. So we do have to sort of play a wait and see game to see how this plays out before I would get really concerned.
Let me just talk about the gray area here, because you have these economic leaders that are saying, hey, don't panic, but then you have health officials that are saying essentially, hey, panic. So I think that's where the divide is. I want to show you this. It's Larry Kudlow. He's the National Economic Council director. He defended the administration's response to the virus and said the U.S. has this under control. Take a listen.
And so far as containment is concerned, we have tightly contained this. So it's an early success for our side, but we'll see in the next few weeks.
All right. So, Doug, you just heard that we're going to see in the next few weeks it's under control. From your perspective and your profession, does this ease investors' fears?
I always think of the Trump administration as the biggest, rah-rah person out there in terms of trying to keep things positive. And this goes to that, trying to keep people positive. I think in the grand scheme of things, it isn't unlike these other ideas or other problems we've had with other epidemics. But, I think they're trying to keep people from overreacting. And that's kind of what happened. You do have an initial knee-jerk reaction, and they may have stemmed it. So if they have, then they're going to be correct. So the bigger issue is, are they right? We don't know, and that's what creates all this uncertainty. So you have to move behind that and look longer term. Look, there's no doubt that China's factories are only operating at about 50% of capacity because of what's going on. The entire travel industry, people are canceling left and right. They're going to have an impact. There's going to be some short-term things. But it's really an interruption and not a complete halt of the economy worldwide. And so if you look at it like that, also in the past, when things have been interrupted, there's a complete ramp back up. And so you make up for lost time.
Yeah, and that, we may be seeing that right now. I don't want to cut into you, but I do have to go. But I just want to say here, the Dow's up 300 plus points right now. So we'll see how that rebound plays out. But again, this is a significant jump there. Doug, I appreciate your time. It's Doug Flynn, certified financial planner and co-founder of Flynn Zito Capital Management. Thank you.